let's get back to the effect of these Trump tariffs and Australia's 3-year bond futures extending the rally to a 6-month top, implying some 100 basis points of rate cuts this year. Let's get across it. Mark Todd is joining from the Bank of China, and Luca Santos from ACY Securities. Gentlemen, welcome to you. So much to watch at the moment. Mark, what are we seeing with those yields?
Buy, baby, buy.
Right. You've got to go somewhere.
It really is a buy Australia moment. We've been... So I feel like, one of the ways that we would think about that is you might sell into some of that strength in rallying because, we've been long a lot. And so I think we're probably taking a little bit of money, the customers are taking some money off the table. But I don't feel that they think they can buy back into it anytime soon. It is a very strongly bid market. And I think they're probably waiting to see where the next direction comes, and is it in the form of the RBA and cuts or whatever it might be. But, we've been saying for a while the world will go lower because they don't want to get into a situation they had in China where if you lower rates, you expect people to start, consuming, and that isn't happening. So now you've got to put stimulus into the Chinese market. So you really don't want people to go into their, human caves and say, look, I don't want to spend, I'll just save some money and I'll try and work that out.
Yeah.
And that no one's going to go and buy a Breville. And so that would be, just that's not helpful on an economic sense. So you maybe want to try and get in front of that freight train.
Is the market starting to price in that prospect of stagflation where we are seeing likely price rises?
Certainly in the US, it's stupid inflation over there, and here it's just going to be your normal stagflation, and we'll ignore it for a while and don't care about the inflation, care about the people. Growth becomes the catalyst. Growth becomes the theme, and so if we can cut rates, then the government doesn't have to do anything silly, and so you'll be a rate cutting.
And the population believes it, so everything should be fine as well.
Yeah.
What are you seeing, Luca?
Not different view. I think everyone is seeing particularly the same view. More into currencies, swifting a little bit more into currencies. We see the Australian dollar losing a little bit of grip against the Canadian dollar this morning. Very interesting trade. I do believe we can possibly continue to have a much more stronger Australian dollar this year. Australia, RBA will continue to hold. I don't believe on a cut. I don't believe on a cut, at least on the second quarter. Maybe on the third quarter and the last quarter, we have 2 cuts remaining for the next...
Market bets firming for a May cut?
May cut, for sure.
I don't believe on that, no.
So one of the ways to think about all of this is not what they should do, but what they will do. And what they will do is try to stop the panic. So if you've got 1,650, in the Dow, and everyone's talking about it, all we're talking about is this. And it's then, okay, does it then become a cartwheel in panic and everyone's an expert? Like, we do nothing with America. And so they go, hey, what about China? And so it's a question of the panic. It's not a question of the inflation, it's the question of the mindset. And that's what they need to get.
I believe on that, and it's exactly what the population wants, a cut. And exactly what everyone was wanting last year as well. I want to cut, I want to cut, I want to cut. And then comes into this year, and then they deliver 25 basis points cut. And then our population wants more and more and more. So how many cuts are we going to have this year? What do you think? 2, 3?
I think
1?
we have 2, maybe 3. I think it's a question of, and it's also a function of what the rest of the world does. You can't be a bubble at the moment.
Correct.
It's the rest of the world against America. It's like, whatever. The 740 billion people having a crack at the other 300. And so if Poland goes, ECB goes, UK goes, we're going, no, we're not going to go. It doesn't work out that way.
You can't make a solid forecast now, surely, because we know that Trump is going...
I just did. I made a solid forecast.
Well, you said 2 or 3 to come.
You cannot put this genie back in the bottle. Tesla, brand destruction. America, brand destruction. And so you can't put that genie back in the bottle. So the world has to rethink about who the winners are. That's that.
I'm saying potentially it could get worse from here, particularly if we do the spiralling trade war, where it's tit for tat. Because Trump's already said that if they're going to hit us, we'll hit them again.
We're going to hit again harder, yeah.
So everyone, particularly the navel-gazing American politicians, think about how people will react to them. The real question for markets is how will people react to each other? So China, South Korea, Japan. They are not mates. They are not going for beers on Friday. They met last Sunday and they said, we are going to do more trade with each other. What do you think India is going to be doing with Australia?
Yeah.
What do you think about all these countries? We just got a $6.5 billion contract for a radar. It's about how people pivot from America as opposed to pivot to America. And America goes, if you do this, if you do, mate, be gone for a minute. We're going to go this way. And so, I was just saying earlier, tourism out of the US, $228 billion, three biggest tourist cohorts, China, Canada, Mexico. What does the tourist dollar look like in America?
Yeah.
Arms sales, $318 billion. Exported arms sales, $318 billion. To Europe, to Saudi. How does that look going forward?
Well, also geopolitically too. It's in terms of strategy. Look at Southeast Asia and those economies that are hit hardest, like Malaysia.
We're picking on Cambodia.
Vietnam, Cambodia. Where are they going to turn to?
Well,
they're not going to turn to. Yeah, exactly. They're going to turn to China. Not
they'll go to a big economy. Okay, yeah. China takes its population consumer content from 55% to 70%. Cambodia, Vietnam, Thailand have all got to sell stuff. They'll all want to do stuff. They'll all be tourist destinations. It's just, okay.
So will China become the new US then?
Well,
for their trading partners?
But that's the talk that we're hearing from Xi Jinping.
And then if we have China being the new US, we have a very strong Australia as well.
The irony is that we heard from Xi Jinping saying, we're the free market here.
Yeah. The command economy cannot be commanded. They need it to be an open and freely transferable economy as they try to get into that space, so movement of capital and stuff. So they don't have to, we don't need another America. That's the whole point that China's saying. Okay, there's 750 bases around the world that are American military bases. China has none. They're not going to go and do 750. They're not going to go and do, they aren't trying to be America. They're saying, just let us do our stuff. You want something cheap?
So,
done.
Luca, the flip side of that equation with the Aussie dollar, are you seeing, as far as the US dollar is concerned, that weakness, is it going to persist then? Because it's all been about that American exceptionalism.
Yeah.
That's now just evaporated,
I think so, yeah. That's exactly what we've been talking. If China goes well, Australia goes well, and then Australian dollars goes well as well. If Chinese yuan goes bad, Australian dollar goes bad. We saw the Australian dollar, the US dollar index falling all the way from 110 to now 102, 103 this morning. That's pretty much a 5 to 6% drop in less than 2 months. Most likely, and not only me, Goldman Sachs as well was predicting Australian dollar against the US dollar to be at 68 by the end of this year, 68 cents by the end of this year. And as everyone is saying, if RBA do cut, and everyone cuts again as well, UK, ECB, sorry, I forgot your name. Mark. If Mark was saying everyone cuts and RBA just goes with the flow, most likely yes. Otherwise, if we continue to hold, then we're going to be that little duck that no one wants to talk about. So yes, I do believe on a strength from the Australian dollar against the US dollar and against the Canadian dollar as well.
So Mark, those US Treasury yields overnight, I mean, they plunged, didn't they? They were, we lost about 19 basis points in the 2-year.
Yeah.
So what are we going to see tonight, do you think?
Oh, I wouldn't be surprised if we see some sort of retracement on that. I think the flight to quality, is a more interesting conversation over the next 3 or 4 months. So if you think about it this way, the rest of the world is going to react to America in a way that says there'll be more government borrowing. So we want to make guns in France, whatever, and so we want to buy those. We've got to borrow more. So Germany, the UK, everywhere's going to borrow more. So there's going to be this crowding out in that sovereign space, and people will then make a decision: do I want to buy treasuries, or do I want to buy JGBs, or what do I want to do? There will be some moral suasion. I am sure of this. Andrew, buy Aussie, buy Australian government bonds. You've got $1 trillion. You're an industry super fund. You're an Australian bank. What are you doing? And if you're a UK bank, and if you're a European bank, what are you doing? Why you got treasuries? And so Japan has 1.3 trillion of treasuries. Hey, what do you reckon, guys? Where are we going to go with that? I love Japan, but let's cop this. And so they'll be saying, what do we want to do? It just, I can't imagine there isn't going to be this crowding out around buy local. And, you saw the Swiss were saying, do we really need to use State Street as a custodian? Like, they have not honed in on how they're going to hurt America. But if they start to hurt America on custody, holding assets, trillions of assets, well, they're going to say, listen, let's go to BNP or HSBC and let's hold bunds, sterling, whatever. It'll be, the game is at foot.
All right, well, Mark, you're willing to make forecasts. Where will we be at in 6 months, which is quite likely to be an eternity at this time?
America's uninvestable. Everyone's trying to work out how to get away from America, and because they don't understand what's going on, and that noise will get higher, that noise will be more aggressive, and America won't like it if the world pivots, so we're going to get a lot of volatility around geopolitics. China's probably going to be able to get that stimulus going. They'll accelerate. Europe and Canada and places like that will look at internal barriers to entry, and they will try and stop the internal barriers to entry. So there'll be a lot of work done on regulations around how we can freely transfer and do stuff. And then equity people will be saying, who are the winners in Europe? Who are the winners in Canada? Who are the winners outside of America? And they'll start doing a lot of work on trying to get that done.
Luca, willing to make a forecast?
I completely agree. I'm not trying to copy here, but I completely agree with you. I think everyone's trying to get out from US at the moment, and we're seeing a lot of outflows from US dollar to Japanese yen even this week. We saw a huge move down. Japanese yen was trading at the level of 150 around that, and everyone was like, "Oh yeah, it's done. Japanese not gonna take the flow." And look at surprise, we see Japanese yen trading at 148 at the moment. Somewhere around those levels. Same for Australian dollar. Just one other thing that I would like to pout here is the gold. Look at gold. I mean, that's a big, we should be talking about that as well. Such a 20% move in 3 months. I think this is showing how fear the market is having at the moment. It's not more about the VIX, it's about how this move happened.
And also central banks. If you're a central bank and you say I've got 50% in the
Exactly.
US, let's make it 35% in the US Treasuries and buy gold.
Exactly, and just buying gold. All the central banks are buying.
Near a top, at least in the short term, because there weren't a lot of big moves. It's actually come off over the past sort of 12, 24 hours.
Yeah, gold came off a little bit.
Given it's a crowded trade.
Yeah, but not much, from $3,160 to $3,120. So
all right, so you see it's going to keep going.
100%. Maybe a pullback, that's normal market stuff, but maybe a pullback and then a continuation up to 3,400 until end of this year, most likely.